Hello, everyone, and welcome to Real Estate Right Now. We talk about real estate matters that matter to you. My name is Jay Izzo, and we are live here from Linda Craft Team Studios here in Raleigh, North Carolina, part of the Greater Research Triangle Park. Today's show, talking commercial, we brought him back, Baxter Walker, commercial broker, principal Avison Young, who joins us at least 3 times a year to give us an update on the commercial markets. And we got a variety of topics we're going to talk about today, and so we're so glad that you joined us. Welcome back, Baxter.
Glad to be back.
Yeah, it's
good
good
to be here.
Good to see you. I talked earlier. Good thing we got the memo on the blue jackets and the white shirts and the blue jeans.
That's right. That's right.
So we got the memo, so we're good here. So I called this the State of the Union because it's the first quarter here. Where are we right now as the commercial market? Where are we at right now, specifically in the Triangle?
Sure. It is still very strong, which is good. And now there's different parameters of it, different sectors some are performing better than others. And we've seen definitely some strong movement on the just development side. Land is king. There's only so much amount, so much of it. But we have seen that start to spread out geographically. We're in very much of a sprawling market. We always have been. And with 540 doing what it's doing, we're starting to see more spread out. And that could be commercial development, could be residential. They do not work in silos anymore, vacuums anymore. They are very much relying on each other. So
we're seeing more and more of these communities that mix the commercial with the residential. I think it's called OX is the designation. Is that correct?
That's for Raleigh, I believe.
Yeah, the OX designation.
Right.
And so we're seeing a lot more of that. So you're right. It doesn't operate in a silo so much anymore. We're seeing a lot of combinations of that.
Sure.
What sectors of the market right now are the strongest that you're seeing, especially as we move into this end of this first quarter?
Sure. And also to address where we start to see those neighborhoods, municipalities love those because it helps with traffic. It helps communities serve themselves, right? And so if somebody needs to go to a doctor, or if they want to go to a restaurant or whatever, they've got something close by. They call them usually like more neighborhood centers. Or if it's in an apartment complex, multifamily, the first floor will be retail. So they have more things where they're self-serving. So you see more of those. So what we've seen just again, very strong is on the medical front. That never really slowed down. And medical is something that is just always needed. And then we see how that positively affects the retail sector because so many of those businesses, whether it's dental, orthodontics, or primary is not so much, but more on the specialist side, they're going into more retail centers for the visibility. And so that makes retail strong, but retail's been strong in and of itself. We seem to have survived the, what you call the Amazon effect, where people are just sitting on the couch, ordering things.
Well, that's what I was going to ask you is that actually you saying the retail is strong surprises me because we're such an I want it now, Amazon-driven society. I don't have to go anywhere. I can stay in my house and order it and get it delivered the same day.
Sure.
That's surprising. What do you think is driving that piece?
So, of course, a lot of it's on the restaurant front, which of course,
we love to eat.
Yeah, right. Yeah, we got to eat. We got to eat. And retail follows rooftops. And we know, as you and the team here knows, how strong that's been in this market over the last, it's really not at a healthy balance now, in my opinion. There's just not enough housing across the price points. So, but as things developed, we'll see lots of times where the residential developer or the retail developer who's going to come first and who's going to pull the trigger on that section, that region, because they both need each other. So that's where it remains strong. And so people, they want to be out, particularly after pandemic, they want to be out and about, they want to go out and do things and want to get out of the house. It may have changed a few things, but even, like when I've been to larger places like Best Buy or what have you, they seem to be doing well. There's many people that just they want to be out there. They want to see it. They want to operate it, not just assume it works well and order it online.
That's interesting. Okay. So retail's been strong. Medical's been strong, which we have an aging population. So medical, that doesn't surprise me too much. The retail surprises me a little bit. What about warehouse? What are we doing there?
Warehouse and flex, which, flex space is usually
Yeah.
the smaller warehouse section is what we call it in our vernacular. That is strong as well. And there is no work from home when it comes to flex and warehouse.
Right.
I mean, people have to be there. They're either
Right.
manufacturing, there's distribution, but it has to be done on site. And so much of our community and region is based on the home construction, new home construction. That's a big part of our economy. And then a lot of people in the flex, they support that. Now, life science took a lot of the flex space and did a lot of conversions. Life science really grew. Say 5 years ago, there was just really a spike in life science sector. And it slowed down a little bit, partially because of funding, partially just because it's just ebbs and flows. But that took away some of the flex space, which there was already a demand for it.
Right.
And so we very much have an unhealthy supply of flex space, as does the housing supply, being unhealthy for just in terms of not a good balance.
So when you say unhealthy, is it vacancy or we just don't have enough?
We don't have enough.
Okay.
We don't have enough. Right.
Okay. There has been, when I read the Triangle Business Journal, and I look at the commercial, they put out their big commercial piece, right?
Right.
And talk about vacancies and that type of thing. Over the last few years, vacancies, the big vacancy space, at least I've been seeing, has been office space. How are we doing in the office space right now in terms of where we're at in the market?
That's improving when it comes in terms of occupancy and that stat, as well as just people in the office. If there's, like, I know, like where my office is in Wade Park near the Novo Center where the Hurricanes play. And more, I'm having to park a little further away just because the parking lot's getting more and more full. And I'm a member of the Triangle Community Coalition, which is just a great organization here in the Triangle that really is a good voice for developers. But we had our annual meeting, and the Raleigh mayor and the Durham mayor spoke, and the Durham mayor was speaking on how for the Durham government offices, they have a requirement where the employees are 3 in, 2 out, a hybrid, but majority of them are actually in all week. And that has a residual effect of how that positively affects the retail that are near those offices. So if there's more people in the offices, office buildings near where the restaurants are, the restaurants will benefit from it. So there is a domino effect. But we have seen, and I think most companies will land on the hybrid, and then so it's a matter of, we call it right sizing, where because the collaborative space, or just however somebody wants to design their office space, that based on their culture that they're providing, and then just how many people are in, and who gets an office, they just have to pick a desk when they come in. That's on each company and how they decide. But more and more people realize they need to be in. They just need to be in the office for the synergy and just to create opportunity.
Yeah, we had a downtown Raleigh had a tragedy a year ago where one of the oldest restaurants that was down there by the government buildings, it shut down because simply they just were not getting enough people to come in because everybody was working, from home.
Sure.
And I think what people don't consider, or at least not consider very deeply, is when people are working in the office space, it drives so much of the other pieces of the economy in terms of restaurants, especially restaurants.
Sure.
It keeps them alive, but also the small shops and things like that that are around there. And that's the part I don't think people consider, is that working from home takes away from the employment of a lot of people who don't, because you can't work from home if you own a restaurant.
Correct.
You
You're very seldom home if you own a restaurant.
Try cooking from home at another location.
It doesn't work well.
It doesn't work well at all. So I guess,
thanks for the
oh, absolutely. Enjoy. Please, the Linda Craft Team Yetis. Yes, they're beautiful. We love them. They're great. And Baxter's enjoying it.
And there's and for the record, there's Mountain Dew.
There is Mountain Dew in there. We didn't want people to judge us that we're doing it some sort of early morning imbibing. That is not the case this morning. I promise you that. So let's talk about uh, how a change in national government can affect commercial, or does it have an effect? Because we have a different president, we have a
So,
different
so we're going there.
well, not politically, but I wonder if there is I mean, with the change of administration,
Sure,
is there
sure.
a change
Sure.
of? We are not being political here. We just want to know if there's a change in
Sure.
what we see in that in the
Sure,
markets. So, do you see change? Do you suspect change? And what would those changes be?
Sure. Good question. And there were many people that were waiting to make decisions based on how November went.
Mhm.
You know, one direction or another. They were waiting on that, which is typical any election year, particularly on the presidential election, and sometimes on the locals, but particularly on the presidential. And then now there's some that are just waiting to see just how the tariff things
It's gonna
lay
play
out,
out,
how
yeah.
that plays out because of just construction costs, how it may affect that.
Mhm.
So the jury's out per se on those things. So, you know, in my opinion, all of these issues, they are important. However, no single issue should have where somebody decides to make a big decision or not. It
Okay.
shouldn't be a single
Mhm.
thing that does that. It should weigh into it, but there's so many factors as to, you know, we've ebbed and flowed through a lot of political changes over many years,
Right,
and
yeah.
and things just for the most part work themselves out. And so if the decision to build a building, expand your business, or whatever is the right thing to do, yes, look at it all, look at interest rates, look at everything,
Sure.
be properly advised when you're doing the process. But try not to have one single thing make or break your decision.
Yeah, I think it's interesting because I think sometimes we think that a change in election brings about these dramatic differences, and
Mhm.
we've been through in the last 20 years different administrations,
Mhm.
and it seems that we've been able, at least here, to remain pretty consistent.
Sure.
You know,
Sure.
I mean, COVID certainly affected us,
Mhm.
but I don't think it's been our you change in administration that's
Mhm.
necessarily affected us greatly. I think what you said is so appropriate. You know what? If you're going to invest,
Mhm.
right?
Right.
Don't shy away from it just because of change of
Mhm.
administration. And I think
Sure.
that's probably the biggest point. What's the sentiment among your colleagues in the commercial? Are they feeling positive about the commercial market going into 2025? Are they in a standstill position? Are they pulling back? Where are you seeing your colleagues right now?
It's a very common sentiment of it'll be a fascinating year.
Oh, okay. So none of the three. It's just going to be fascinating. Okay. Wait, well played there, Baxter. That's
Yeah,
that's well
well,
played.
thank you. Well, and there are certain segments that are very strong, and I've worked with many that are mainly work on the site selection side, where somebody's looking for land to build something. And you know, my opinion, interest a lot of this goes back to interest rates, when just the cost
Right.
of money, you know, that plays a lot into it, as it should. Um, However, when opportunity presents itself, refinancing, generally speaking, is always an option down the road. So if
Right.
there's a good opportunity presents itself, uh, take the leap. So if it makes sense, but in my opinion, not being in the financial
Right.
professional world, the rates are kind of where the rates probably should be in terms
Okay.
of just a
Right. Yeah.
healthy rate.
I
just,
agree.
you know,
I
I
agree.
just, because you know, at some point, if it's 3%, if things grow 3%, you're basically getting something for zero. You know,
Right.
that's just kind of how it works out. So, anyway, that's that's Baxter's opinion. So, but that
We
being
love
said,
Baxter's
yeah,
opinion.
well,
We do.
most of the time people do, not always, not always, not always. Where it has been a challenge is on the investment side. So we work with cap rates, so capitalization rates. So basically, it's what a property is earning at a snapshot based on the net operating income.
Yeah.
You know, and so that those move very slowly. They react very slowly to market conditions. Interest rates could change tomorrow. You know,
Right.
so but these do slowly. So ideally, want a 200-point spread. We spoke about this before. A 200-point spread between what you're buying and what it's earning, whether it's 6, 7, 8%, and what
Right.
you're paying for it leveraged. You want a 200-point spread between interest rate. Just you want to make money on it, on the
Right.
property.
Absolutely.
But more and more, cash is king, or 1031 tax deferred exchanges
Right.
are making those deals happen. But even if it ends up being a wash, there's still value in ownership, and there's still
Sure.
value in being able to shift gears down the road and invest on the financing front. So even that in of itself, just like we discussed a minute ago, shouldn't deter a leveraged investor from looking and seeking opportunity.
In residential real estate, we talk
Mhm.
quite frequently, and this is to follow up your question. We talk quite frequently on appreciation.
Mhm.
How does commercial do when it comes to appreciation in our area?
Yeah, sure. We've seen a big jump in the last few years.
Okay.
And it's hard to say. I've never been one that wants to put a percentage
Right.
each
Right.
year
Right. Right.
because the
Yeah.
commercial.
No.
Well, and it's just the commercial sector is just so volatile.
Mhm.
As to one reason why generally when you get financing, they'll put balloons on it. So every 5 years, 7 years, whatever, depending on what kind of interest rate we're able to get, the bank wants to revisit the asset and just see how it's performing.
Mhm.
As compared to residential, they feel comfortable that it's going to increase in value
Right.
over an extended period of time. Commercial real estate can ebb and flow.
Okay.
Generally increases, but it just ebbs and flows at a different rate each year.
So would you say it's more volatile
Yeah,
than residential in terms of the appreciation?
Right, very much so. I will say generally, particularly in this market, communities are either growing or they're shrinking, and
Right.
we're growing, and we've been growing for decades.
Right.
So with that being said, generally property values are going to increase, and so with people moving here, and you see the Facebook pages, and
Right.
we get different opinions on people moving here, but that creates value. And I know we have a whole other issue of affordable living. I like that term. That's one of the things the
Right.
Durham mayor said. Affordable housing kind of is a term that kind of gets thrown around a lot, and lots of times it's thrown around during election season.
Right.
But affordable living, I like that, because that just means there's a lot of factors that are thrown
Yeah,
into what.
Totally agree.
And not saying there's not an issue there. I think there needs to be something resolved there. But that being said, when we had our tax reval in Wake County last year, a lot of properties they went up, and they probably should have. I mean, they were suppressed for a bit. So, but it's created great opportunity we've seen a large increase of value on the office, smaller office, we call it condos, office condo. Those really increased in value the last few years. Land certainly has. Land's extremely subjective because it depends on what somebody wants. It's highest and best value, what somebody wants to put there. And land owners, land sellers, are for the most part very patient, so they can wait for the right number. So I would say generally things look good and things are going in the right direction.
Paul Fitz, who we both know, been a personal friend of mine for nearly 20 years, maybe longer, closer to 25 years, actually, now that I think about it. He was a candidate for mayor here in Raleigh. And he pitched an idea about, because we had such a high vacancy rate in office, of turning office space into condo living space. What is the reality of being able to do that? Is it difficult? I mean, it seems like a reasonable thing to do, right? Sure. But I don't know what the challenges that come with trying to do something like that. And is it a reasonable idea?
The challenge there's a couple things. So the physical challenge of doing it is the utilities.
Right.
So generally in a multi-story office building, you have major corridors, you got your elevators in the center, you got stairs on the side, and then you got a core bathrooms, right? And that's how the building's designed. When it comes to getting water to something is easy. Getting et cetera away from a bathroom, say et cetera.
Yeah.
Away from a bathroom, G-rated, away from a bathroom. That's the challenging part, is the infrastructure for adding that later.
Got it.
So now if you're talking about each unit's now going to need a bathroom, a shower, or whatever it is, it's a very expensive venture. A great idea, mind you, it's a great idea. And maybe a solution is, okay, well, maybe the whole building not, but maybe it's a really extreme mixed use where you got retail, you have a flue for residential, and then the top floors, which usually as you go up in the floors, the more expensive the change is, because now you're making changes all the way south to the ground, and to convert some. And I do think some of it too is, again, things, I remember having conversations with folks during pandemic, of course, which is hard to believe it's been 5 years from now when all that started, but how, okay, this is permanent. Nobody's ever going back to work. Nobody's ever doing this. And we've already seen it, people coming back. And so the immediate reaction, it's not saying we can't learn and evolve and maybe tweak things, just because, whenever we come up with a challenge, professional, personal, whatever it is, it's just opportunity for growth. It's opportunity to improve. It's opportunity to do things a little different. Not saying that's not the case, but it wasn't a be all end all of a new way to work. It's just not the way it happened.
Well, and I think that's something that we have to pay very close attention to too, is that we have a tendency to be very binary, right? It's either ones or zeros, it's alls or nothings, and we don't like the gray area. But the fact of the matter is, we lived in a pandemic era for a few years, and we felt like, well, this is the way it's going to stay, right? So we all went zero, right? Because this is the way it's going to be. Because before we were ones, everybody just went to work. Now we're in a hybrid. That's gray. That's very gray area, right? Because it means you're in part of the time, you're out part of the time, right? So, and that's a difficult thing. And then that changes that challenge. And I love your idea here, that mixed space piece. And I never considered, by the way, the getting the water and the facilities in the building is not the problem. It's the waste that you have to consider. I didn't even think that way. That's a great, see, this is why I bring him on, because see, he makes me think about things that I don't even consider. And so this is why we bring Baxter.
I can talk, et cetera, with the best.
So as we wrap up this show, for this segment of the show, how do you feel right now in terms of going forward the rest of 2025? How are you feeling about, what the future projections are? And I would also ask this: if there is a good investment opportunity, people want to invest, do you see a right now a pretty good investment opportunity in the commercial space?
So I do feel really good about the years coming up, whether it's opportunity on the office front. They still have some dust to settle when it comes to some of those loans and some of those kind of popping up. So we'll have to see how that shakes out. I do feel good though. And so where there's certain service offerings, certain business sectors that are just really just doing well, they found footing. The mental health industry is just blowing up as it should. And I mean, at one point I was working with 4 different mental health providers, just finding space. And so there's certain things where there's just really a need, and it's really following where the need is. And so when we're working with businesses, it's it's not about location and does this work and are the terms reasonable? It's, does it make sense for your business, and does it make sense for the future of this region to be here for a longer term? So there's just a lot of ways to look at it. And so it's, when it comes on the investment side of it, that office condo front, which is a lot of the first time investors, that's what they jump into. They did jump up in value. There's still opportunity for it, probably more what we call an owner occupant. If somebody's going to occupy the space, you can get better financing. You can own it, and then it's a different way to look at the numbers. And even those kind of going back to the cap rate, if lease rates have gone up, they have increased, but not quite to the level of what the per square foot purchase price has gone up. So that's what's brought the cap rate down, just because of it's just everything relates to everything else. So, but again, looking at land, and this goes down to kind of patience, because it takes a couple of years to build something, and different municipalities take longer than others. That's another part that the TCC plays a role in, just to the quicker the better for being able to build something and get things approved. And it doesn't make sense to do it. And because land's not going anywhere, we've only got so much of it.
Right.
And then it's looking at opportunity around the southern sector and around the northern sector, and then on the infill.
As always, full of amazing information. And make the show so much fun. I learned so much when I sit with you every time we get to do this. And we do this about 3 times a year. We do a quarter at the end of the quarters and right in the middle, and it's always so much fun. Thank you for being here with me.
My pleasure.
Listen, there are people out here who are watching now or are going to be watching DBTV, because we're now on Apple TV, by the way. 8:30 morning on Saturdays on DBTV. So find the app on Apple TV or Roku or LG TVs or Samsung TVs, wherever. You can watch us there at 8:30 a.m. on DBTV. Also, you can listen to the podcast. You can rewatch this. Also, if you're on LinkedIn or Facebook, you can watch these on several channels as well and rewind it. And so we appreciate you doing that. So people are going to want to go, well, I need to learn more about commercial, and I need to learn more about investment, or I want to invest. I want to, I've thought about building the restaurant. I don't know where to start, or I want to get into this medical thing. How do they get a hold of you?
So probably the easiest way is I'm with Avison Young. We're based here. We have a local office here in Raleigh. We're based out of Toronto, and I give my email and my cell.
Yeah, absolutely.
The better. Baxter.walker@avisonyoung.com. And it's AVISONYOUNG. Whenever I do that, I feel like I should sing it like the Mickey Mouse song, because it kind of sounds like the Mickey Mouse.
AVISONYOUNG.
Right. And I have a hard time not singing it. But I digress. And my cell is always in my pocket, 919-606-3319.
919-606-3319.
I learned that trick from my dad. The last 4 digits make it 2 digits, and it's easier to remember.
909-606-3319.
Yep.
Did you get that? See, that's so good. Thanks, man. Appreciate you.
My pleasure.
Folks, it's the show. You had a lot of choices. You chose us. Thank you for doing that. Give us a thumbs up on YouTube, wherever you're listening to the show. Give us a positive review, right? 5 stars, and write something positive. Got questions, please come ask them. Find the show, lindacraft.com, LINDACRAFT.com. And as I say to you all over the world, you know what that is. Ciao, everybody.